What is going on, investors? Hopefully, guys are doing well out there. That is right. It is the weekend. It is Friday. It is also Veterans Day. So thank you to all of the veterans out there. We really appreciate your service to the great United States of America. And it is also time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. This week we had a rally across the board and a plethora of information. We better not waste any time and kick things off like we always do with Meta Platforms for the weekend. 316.60, like pretty much all of these stocks, up over 3.8%. To finish the week at 328.77. Elon Musk unveils the Grok AI bot onto Twitter, just to, I think, a limited number of users. We haven't gotten a wide rolled out there. Essentially a ChatGPT copycat, if you will, but what we know about Elon Musk and Twitter is every other social media platform will be copying it. There's already a version of this like on Snapchat, but obviously when these chatbots roll out to Meta platforms onto Instagram and Facebook, that will be a big, big deal. Now, Meta already has the capability to do that. They already have those Llama 2 models that they've been basically releasing open source to the public, and maybe that's kind of the strategy. You get those out there, you get them fine-tuned, and then you roll them out onto Facebook and Instagram in a major way. And that will really, really take these chatbots from kind of something that a geek uses to something that everybody uses. Now, Meta and Amazon debut a feature to shop directly from Facebook and Instagram ads. Nice little revenue sharing model here, where Amazon's going to run some ads just directly onto the social media sites, pay an affiliate commission essentially to Meta, and maybe make some more sales that way. Now, Meta is eyeing a return to the big China market with a 10-cent deal to sell those unpopular VR headsets here in the United States. So here's the deal. So Meta Platform is going to get in there. They're going to create a low price version of the Mark Zuckerberg goggles. 10 cents is going to monetize it really with the software and the applications on the device. So this is really, in my opinion, more or less kind of a device thing. It's going to be a lower cost device as well. But what this could do for Meta is it could just get the volumes up on these devices. So when they do sell them for, quote, full price here in the United States or other parts of the world, the profit margins can be a little bit larger than obviously they are now, which more or less are negative. Now, Google, Meta got up in an EU court and they won to avoid Austrian content curbs that would fine the two companies for, quote, illegal content posted on their sites. That's why whenever these companies do something bad and they get taken to the court or a law is passed, you always have to wait until the final verdict, because these companies have pretty darn good lawyers, to say the least. Now, Meta is restricting political and, quote, regulated industry advertisers from using generative AI ad tools. So if you're a political or likely someone in the Second Amendment or other types of, quote, restricted ad groups, maybe even like tobacco or something like that, well, you're not going to be able to use the latest and greatest tools. But guess what this is probably going to mean is a third party will create a generative AI tool that you'll be able to plug into potentially into Meta's system. That is likely what the workaround there is. Now, Meta CEO Mark Zuckerberg sold $8.9 million worth of stock. These things tend to be kind of pre-planned. And look, $8.9 million after you take off the income taxes here in the state of California and the federal income taxes that he pays, it's like $4 million, and $4 million in the heart of Palo Alto is like the poverty line pretty much for Mark. I'm kidding a little bit, but not really, actually. Now, moving on to Apple. So the weekend, 177.84 up. Woo, this one up 4.78%. I mean, when the largest company in the world is up nearly 5%, it finished the week at 186.40. Now, Apple is set to appeal those EU App Store decisions that says its iMessage service shouldn't be a default option and that Apple should allow for more messaging options on its service. Apple saying that it's critical to the product. Another one of these court cases, again, where you get a decision from regulators who, most of them can't even really look at their iPhone without going through 4 different bifocals or getting a bypass surgery to look at it. Most of them probably don't even know what iMessage is or does, but I'm kidding, maybe just a little bit. But wait until that plays out in court to see what happens there. Now, Apple's Mac reviews, they're loving the new battery life. We talked about these Macs that were released the last week and obviously had increased battery life compared to M1 versions. I think we're on the M3 processor chip at the current time. Certainly a boost in performance there, and gamers are showing some signs of life as the company's graphics and capabilities from a gaming perspective. Also, you're seeing a lot of games just strictly go to kind of a streaming environment, which would allow maybe more Macintoshes to be used for that. Certainly an untapped market or a lesser tapped market for Apple. Now, the company is saying that they're going to delay software updates even as glitches remain. Many glitches being reported on the Apple iOS system. And I tell you what, for a company with this much money and spending this much on R&D, some of this is somewhat unacceptable, in my opinion. Moving on to Amazon. Started the week at $139.55, up nearly 3%. Finished the week at $143.56. We're pretty darn close to a 52-week high on Amazon, and like a lot of these stocks. Now, I talked about this when we talked about Meta, but looks like Amazon is going to have a shopping feature directly inside of Facebook and Instagram. I kind of like this because, quite honestly, when you're on Amazon.com, feels like you're back in like 1999 in terms of web design and functionality. Their web app or their mobile app is certainly a little bit better, but I tell you what, you start expanding this out to Facebook. Maybe you can work a deal out with Twitter. Maybe you can work a deal out with some other social media sites as well. And all of a sudden, now Amazon's in a lot of places. This probably, I would say, if this affects anyone, potentially Shopify, since if you wanted to advertise on Instagram or Facebook, you were typically, like if you're an e-commerce company or something, you're driving that traffic to your Shopify store. In this case, it could be possible that you might want to drive some traffic to Amazon if it's integrated that deeply. Now, the company is also expanding Amazon Fresh to non-Prime members. Fresh is their grocery delivery stores. Now, the company is starting to lay off employees in its music streaming division. I can imagine that business unit not wildly popular, considering you have Apple Music, Spotify, among other things like just the radio too. iRobot nears session lows amid the FTC noticing or sending a notice of a meeting for next Thursday. Obviously, this dates back to an acquisition for $51.75 per share. Currently, iRobot is at $28. So the market really doesn't believe that this deal is going to get done. And if it does get done, maybe there's some kind of further haircut on the deal. The original deal was for $61 per share. Now we're down to $28 per share. We'll obviously keep tabs on what's happening there. Very interesting news here. Amazon is developing their own AI model, very similar to like a ChatGPT. They're going to call it Olympus. They're going to offer this internally, largely to AWS customers. This follows the fact that Amazon said they were going to invest up to $4 billion into a very similar AI startup called Anthropic, which has a Claude app that is available largely to the public. Now, I was in Miami literally earlier today. I just got back, actually. I was in Miami last night walking around, and I saw one medical office. I've seen them at other places too as well, down in Southern California, down in San Diego last time I was there. But if you're an Amazon Prime member for just $9 per month or $99 per year, that's a discount from $199 per year or about $16.60 per month. You could get a one medical membership access, which gives you access to medical care for, again, just $10 per month. Moving on to Netflix. Start of the week at $434 and some change, up 3%. Backtesting that trend, up to $447.24. This is after the actors and the studios reached a tentative agreement to end their strike. As you recall, the actors and the writers both went on strike. The writers went on strike first. They got their deal done several weeks ago, and now it looks like the very well-paid actors, or not every actor is really well paid like your Tom Cruise or whatever, but all of the actors, it looks like, in the union might be going back to work. That's certainly good for Netflix and media in general. Moving on to NVIDIA. Started the week at $458. Boom, up over 5% to finish the week at 483.35. No surprise here. Chinese AI startups, they were stockpiling NVIDIA chips like people stockpile ammunition and water as those U.S. curbs kicked in. Those U.S. curbs, first of all, they went into effect this time last year. NVIDIA was allowed to sell kind of a modified chip to the country. Now, it was no secret also that further sanctions were coming down the line. You have a lot of open source models and AI models, along with a lot of enough of these GPU chips out there that it should satisfy probably not all the demand in China for these chips, but certainly some of it. Now, for the piece that is not satisfied, NVIDIA plans to announce 3 new chips for the Chinese market. Again, these will be modified chips to slip under the sanctions. My guess is NVIDIA will get these through. Chinese market will gobble them up. And then eventually, if you don't have a administration change this time next year, chances are the White House will probably look to restrict these at a later date. Now, moving on to Google. Start of the week at 129.65, up 2.3%. Finished the week at 132.60. Now, ChatGPT apparently is eating away at Google's search dominance as the company saw their 91.6% hold on the search market. That was actually slipping just fractionally year over year. I would assume also it probably depends on what cohort you're looking at. If you're looking at somebody that's really young and really into tech and super kind of like a knowledge worker, well, I bet that Google search dominance is actually slipping even further with that group. Now, inside of that group, those people tend to have ad blockers. They tend to maybe not click on ads. I say this from experience, from spending hundreds of thousands of dollars. I made meeting up to 7 figures of spending on Google ads. The people that click on ads are very old people, okay? And I'll put old in quotes, okay? Old is just a number, but people that we tend to view as old or seniors, they don't have ad blockers. They don't tend to try the latest and greatest technology out there. They tend to stick with whatever default search engine they are spit to, whether it's their default browser on a Windows device or a default browser on the iPhone. They tend to stick to that, and those people click on ads. But I bet if you really dissected this, there's probably, I would say the under 30 crowd is probably accelerating away from Google search more than others. Now, Google's new AI chip is to be used by Anthropic. Anthropic getting an investment from Amazon, but also a key investment from Google as well. Both of those companies throwing several $billion behind Anthropic, and they're going to use the TPU-5, which Google unveiled in August. What happens with Google is they unveil these TPUs, which is just another name for essentially an NVIDIA GPU. Now, a GPU and a TPU are 2 different things for all intents and purposes, but they do the same thing essentially from an AI perspective. Now, this is likely very bullish for Broadcom, which is a partner on these TPUs. Also, this version 5E, this is the version they announce. Google tends to announce these things about a year after they are already kind of in effect. So chances are Google's actually on version 6 of that. But it could give Google, if Anthropic has some success here, could bring some other startups over to the Google Cloud, which we saw was struggling when the company announced earnings. Now, Google executives shared details about revenue sharing that they do with companies like Verizon, and we obviously know with Apple. The article headlines references that these are secretive. I would say they're not necessarily secretive. This is relatively industry standard. This is traffic acquisition cost. Whether or not a courtroom decides that, we'll certainly see. Now, Google competes with Amazon, Yelp, and others in search. That's what Google is going to contend with. And certainly they can maybe bring up AI and OpenAI and ChatGPT at the current time. Now, Google is testing 2 new generative AI features right here on YouTube. One for the comments and one to splice up longer form videos. You're likely to see a lot of AI come to Google, and I think it could absolutely help in the comments, particularly if it would work on spam, since I spend maybe half my day trying to delete spam comments off the YouTube channel. I'm kidding a little bit, but sometimes they get a little overwhelming. Moving on to Microsoft, start of the week at 355, up nearly 4% to finish the week at a new 52-week high or all-time high, close to 369. The all-time high was hit earlier this week as shares of the tech giant just continue to plow higher as they've really moved very quickly in the AI race. Luckily, there was some guy that posts occasionally on Seeking Alpha. I don't really do that anymore with my new job here on YouTube as well, saying that Microsoft's earnings that were a disappointment back in Q2. This was all the way back in January of 2023. We're talking about 10 months ago. I said those Q2 earnings from Microsoft created a huge opportunity, and if you would have taken that advice, Microsoft shares were $234 at the time, and they've gone up 57% since then, while the S&P 500 has gone up 10%. When you get it right, you take a victory lap, because the comments will certainly let you know if you're off by $1 or $2 on a pick. Now, Microsoft could see Azure boost from OpenAI announcement. So OpenAI had an event this week where they announced all kinds of new plugins. It looked very exciting. I was bringing up OpenAI. I do pay the $20 a month for the premium OpenAI, and I was kind of fooling around with it. Certainly some very interesting things going on there. But obviously, we saw when Microsoft reported Azure numbers, I mean, they were gobbling up market share and growth there, and it has to be coming from kind of the AI startup market. So this is going to be very exciting. This reminds me a lot of like in 2007, 2008, 2009, when Apple, rolled out the iPhone, obviously, and there was like a rush into making apps and native mobile apps. Like everybody had to have a mobile app basically for the iPhone. I think we're approaching that at some point. Like almost every company or a ton of companies are going to need their own like ChatGPT app. And so that's going to be very exciting for Microsoft, since many of those will likely be hosted on the company's servers. Moving on to Tesla, start of the week at 225, the only stock out of this group that hit the reverse button. This one down over 4.7% to finish the week at 214. Now, earlier in the week, the stock gained as it planned to produce a 25,000 euro vehicle out of its Germany facility. Obviously, that would be a holy grail type product if Tesla is able to pull that off, since the other automakers are likely several years away from that. Although with tax incentives and with being a savvy buyer, you can actually get a Model 3 for not much more than $25,000, $30,000. And in my opinion, and this might not be a great take, but if you can't afford a $30,000 car, you're still young in terms of your financing and kind of your growth as a person. But if you can't afford a $30,000 car, I think you need some new skills. Now, moving over to the technical segment of the show, looking absolutely beautiful this week. Had a huge rally, some hop, skips, and a jump back up to trend. You were in this kind of shorter term downtrend, which we've noted, making lower lows, lower highs, but you pretty much canceled that one out. Talked about how on last week's show, we are kind of converging in a wedge. Wouldn't surprise me if we kind of just stay in this ballpark from like 43 up to 45 on the S&P 500 as you have profit taking probably towards the end of the year, even some tax loss harvesting. Really what you're looking for, again, this kind of recaps what we talked about last week. You're looking for a break above that or a break below. A break above can be bought on the momentum as you'd likely push to new highs. A break below, you'd probably want to just take a breath, but you would probably want to buy that dip as well. Moving on to Meta, just consolidating sideways. It is at the top of the range. You're looking for Meta next week to push higher than this. A close up over $330 per share in the short term can probably be bought, because then we'll look at other stocks like Microsoft. Once you kind of break that momentum, pushing all the way up here to like 384. So you could play like kind of a shorter term trend where you go from 330 to 384. I'd have a stop loss just underneath that, because the other thing that could happen, in fact, the likely scenario is that sellers emerge with Meta and you come down here, retest this area of support down here at 270. That can probably be bought as well. Now, Apple reversed a trend very similar to the S&P 500. We were making lower highs, lower lows. Lower lows are still intact, but the lower highs have been canceled out by a new high. This one, to me, looks like it wants to retest back up here to the 196 region. A quick rejection from Apple next week probably creates buying opportunities on a new lower low. Moving on to Amazon, also looks similar. It's kind of in a similar place than like Meta. You have consolidation at a lower price, consolidation at a higher price. We're consolidating right in the middle. We've had this area of resistance at 145 mapped out on this channel for probably a year now. Stock has just simply not been able to poke above 145. I think you got to close above, I think to be more specific, probably above like 150 on Amazon. You got to close above 150. That I think can be bought because it means you're probably going to come up here and play in this consolidation range like 170 and higher. A rejection here also can be bought, especially if you come down here to like the 120 range. Moving on to Netflix, we've done a complete back test, not quite, but you've almost done a complete back test to trend. That is expected when you're in these long channels. Then you have a decisive and impulsive breakdown. You tend to have a reversal and a back test to bottom of trend. So nothing out of the ordinary, particularly for Netflix. What you're looking for, likely if you're a longer term investor, actually a rejection like next week. You're looking for a rejection next week, a move lower. Those I wouldn't buy aggressively, but they can be bought. The unlikely scenario is, and look, the unlikely scenario is Netflix gets back up into this channel. If it gets back up into this channel, your long portfolio is going to look great next week, because if Netflix can get back into this trend, then all of these other stocks are going to rally higher too. Now, moving on to NVIDIA, also looking like Meta. It's really just been consolidating and chopping sideways since June. Your bottom, now it's a wide range, down from 400 up to, we'll call it about 490. You're now at the top of the range. You're looking for either a break higher. Wouldn't necessarily buy the break higher, but it is a very bullish sign for the stock that reports their earnings on Tuesday, November 21st. So we're about 11 days from earnings for NVIDIA. Could rally up higher into new highs onto those earnings. A rejection here, a pullback to 400. I think you buy at 400 and you just set your stop right here at like 360. So you're risking 40 to maybe make, it's not the best trade. I wouldn't really make this trade, but look, if you're feeling spicier, this is what you want to do. You can play this sideways chop, but what you're really looking for if you're like bullish on NVIDIA, you're looking for a new high, like higher high next week. Then you're looking for a pullback. That pullback buys again. Then you push to another high. This trend looks good until it breaks. Now, Google, very similar position that Netflix was in, very steep upper channel. We broke that channel. Now we're in the process of back testing to that line. Looking good still with Google. It could end up being that you're kind of flattening out an uptrend. These uptrends that we were in were really steep. Just because you break like a breakneck trend, I mean, Meta is probably the best example of it. Just because you broke this breakneck trend doesn't mean like it's over for the stock. Also very similar to Google. You were a breakneck trend, you broke. It could just be flattening out, going sideways. You still got some further upside to backtest this trend. You could go from like 130 back to 139 before it's decision day again for Google. Now, the stock we said last week that was looking really, really good, confirmed it this week. Microsoft just pushing to new all-time highs. This one looking absolutely fantastic. The Wall Street is finally buying into the fact they're going to be charging $30. Like, this company has 30, 40, like nearly 50-year-old software. They literally can raise the price on again this year. It's incredible. Probably be the Apple business model going forward, where they have the same, it's like we're on iPhone 29 and it's the same as iPhone 15, but people are buying it and they can keep raising the price on it. Look, Microsoft Word, Excel, and PowerPoint have literally been the same piece of software for 30 years, and now they're able to charge more from it because of AI. Wall Street's taking notice of that. Dips in Microsoft, as I noted back in January, should be bought. Now, the one stock that's in, like, a lot of these stocks are similar, not Tesla. And Tesla has a completely different business model, right? They're a manufacturer. They're not a contract manufacturer, really a pure play software maker. Medium term, things don't look great. Long term, obviously the stock's been up kind of in a straight arrow now, but shorter term, though, you're still in the process of making kind of higher lows, higher highs. Like for the stock to find some footing right here, it would make sense. You've got a wide area of support for the stock between, like, we'll call it even down here at like 170 up to like 210. Just really need this one to make a new high. You want to get this one back up to 315. That would be exciting. Those of you that are bullish Tesla should likely be accumulating shares in this range. Folks, that was the FAANG Stock Recap Show for November 10th. I hope you all have a safe weekend. Thank you all to the veterans out there. We all appreciate your service, and we will all enjoy our weekend. Have a safe one, and we'll see you again next week. Good luck with your investments.